Good morning, everybody. Welcome to today's webinar brought to you by Wellford, sponsored by Macquarie. Our webinar title today is How to Perform Momentum Trading Effectively in the US and Bursa Market. So my name is Shen Chu. I'm the moderator for this webinar. So today we're going to learn how do we do momentum trading in the US and Bursa Malaysia. Now, before we begin, here's a disclaimer. Whatever we share in this webinar is only for educational purpose. So in no way that we give any recommendation for you to buy or sell any listed securities that we mentioned here. If you decide to make any investment decisions, you are solely responsible for all your investment risks. So today we invited two speakers to share with us this topic. How do we do momentum trading and how do we use structured warrants to amplify your gains? All right. So I would like to introduce our first speaker today. Uh, he has been a part of the Macquarie Warrants Malaysia since January 2022 and is an emerging voice in the equity derivative sales team. He's involved in the issuance, sales and marketing of structured warrants listed on Bursa Malaysia and is actively engaged in sharing his knowledge as part of the desk's ongoing warrant education efforts to help existing and potential Malaysian investors gain awareness and a solid understanding of these products. So he's none other than Mr. Afiq Suhaimi. Afiq, good morning. How are you today?
Good morning, Shane. I'm doing good.
All right,
All
fantastic.
right.
So we can't wait to learn from you about structured warrant. So I'll just hand over the control to you.
Thank you, Shane. Let me just share my screen. So how I'm going to do this is I'll be talking about warrants for around half an hour or to 45 minutes, and then I'll give around 15 minutes to Q&A. But just before the Q&A, I will go through Macquarie Warrants website so I can show you the kind of tools that you can warrants and show you how to use. I will also demonstrate in my slides, but just to give it more live experience, I'll show you on the website itself as well. So uh, I just want to say thank you again for attending this webinar on a Saturday morning. This is a long weekend, and you guys are able to join this webinar and supporting all of us. So thank you again for joining. All right. So before I start, just a disclaimer. This presentation material has not been reviewed by the SC, and then investment products, including warrants, are subject to significant investment risks, including the possible loss of principal amount invested. So if you need any advice, it should be sought from a financial advisor regarding the suitability of the investment product before you commit to invest. All right. Okay, so in my previous session, if you guys remember in June, one of the investor that I contacted with who attended that session told me that they want me to elaborate further on some Greek words of warrants, theta, gamma, delta, so all of those. I told him I can do that, but to trade warrants, you just need to understand that you don't need to factor in all of it to factor all of it in your trading. You don't need to do that. Maybe you need to understand the certain wordings, what it means, what does it do. Up to that extent, you don't need to go too in depth, but I'll still cover it into this session. And today's focus also will be on US index warrants and also Malaysian stocks. So those would be mostly on the technical analysis, which we'll go through by YC later on. So the focus will be US index and Malaysian stocks that are currently in coverage right now. Okay. So just for those who are new to my session today, so just going to go through what warrant is. So basically, it's a listed and tradable product on Bursa Malaysia. It's a derivative product. We call it an equity derivative product, which track performance of the underlying or the mother share. So the type of underlying can be a shares, index, ETF, commodities, among others. So the purpose of you trading structured warrants is to provide exposure to the underlying for a fraction of a price. So I'll go through what this means later on. But another one thing that people usually go for warrants instead of other products is because warrant don't have any margin call. So basically, what you lose is up to only your capital. So there's a limited losses risk. Okay. So why structured warrants? First is the gearing effect. Gearing is very important when you trade structured warrants. You have to come into warrants that have multiple gearings, right? So it enables warrants to move in a bigger percentage. For example, if a mother share moved by 1%, that warrant itself has the potential to 15%, right? Or 10% or 5%. So gearing can go up to 20 times or even more, depending on the warrant itself. And then why you trade structured warrants also is to provide exposure to foreign exchanges. So like our focus today is the US index warrants. Um, last session we focused on Hong Kong single stocks and the Hong Kong indices. So this session is US index and also Malaysian stocks, right? So another thing is that it to trade warrants just enable you to get less capital, basically to use less capital. So by this way, you have excess capital to diversify your portfolio. You can invest in other assets as well, right? You can hold multiple assets. And then bull and bear markets. So basically, we have call warrants and put warrants. So call warrants is for you to leverage on the bullish market, and put warrant is for you to leverage on the bearish market. So I will go through all the examples and all the trading strategies later. Right. So how will you want to detect structured warrants? For example, Suncon C41, right? So Suncon is the Sunway Construction Group, so that's the underline. C is the warrant type, C or CW. So if you come across something that is different than this, then it's not structured warrants. Okay. Series 41 is just mean that Suncon C41 is another label for Suncon warrants. You would have Suncon C38, C29, something like that. So it's just the type of warrants basically in the market. So this is a call warrant. It enables you to get bullish to get leverage on the bullish market movement. Right. So this is an example of a put warrant. So the first one is the underlying share or index, Nasdaq 100, and then the H or PW simply means put warrant. And the series is, like I said, it's just a A to Z or 1 to 99. It's just a way to detect that warrant itself, because each warrant comes with a different exercise price, exercise ratio. So NDXHM and NDXHN would have different exercise ratio and different exercise prices, right? Right. So this is a put warrant, example of a put warrant, and you can leverage this when there's a bearish market movement. All right. So structured warrant works the same way as option, right? So you would come across the same terms as option as well, in the money, out of the money, at the money, right? So similar way, but one way to differentiate these two products is that structured warrant is issued by third party, while option itself is listed on the option exchange. Okay. And there's market maker for structured warrants. So it's important for you to understand that there's a market maker for structured warrants, because market maker provides liquidity, right? Liquidity means that even there is no volume in the warrants that you are trading, you can still buy and sell with the market maker, right? If there is no market maker, you can only buy and sell on the market itself with other investors, right? So that's what it simply means. So it's important for you to understand that structured warrant has a market maker. A market maker enables you to buy and sell with the market maker itself at the current true price. All right. So all the structured warrants are traded in Bursa Malaysia, and it's gone through checks by Bursa and also the SC. So right. So the settlement is in form of cash settlement, whereas it is also traded in the Malaysian ringgit currency, no matter where it's a foreign underlying or not, right? All is in Malaysian ringgit. All right. So the next one is just to compare with company warrants. So like I said, if it's C, CW, H, and PW, these are structured warrants. And anything else, they're not structured warrants. Like WB, that's company warrants already. So the difference is that structured warrants is issued by third party, like Macquarie or any other investment banks. But for company warrant, is issued by the company itself gain to gain capital as a form of capital raising. Structured warrant is an investment tradable on the company share, right? So no market maker for company warrants, but that is market maker for structured warrant. Important for you to understand that. And structured warrant is for short to medium term investment, right? Company warrant is for long term investment. So just a short brief on the example. Right. So I will talk about more on warrant terms, and I'll get to one of the important Greek words. I'm not going to go through all the Greek terms, right? Just one important Greek terms that you can understand. Right. So the first one is expiry. So this is not group. This is not yet the Greek term. First one, expiry. So expiry is basically the date on which warrant will expire. So you have 3 months to 12 months. So 3 months typically is the Hang Seng Index or any other indexes lah. Hang Seng Index, US Index, all the index warrants that we have typically is 3 to 4 months, and up to 12 months is usually the stock warrants. Can be Malaysian stocks or Hong Kong single stocks. So the range is from 3 to 12 months. So this is the expiry date that we priced up for structured warrants. So it's not suitable for long-term investment because there is decay. Decay is basically the amount of value that your warrant has. So the longer the expiry, the slower the time decay is. All right. So basically, this is how you detect expiry on the life matrix. Right. So another one is delta. So delta is the Greek term that I want to introduce to you guys. So basically, delta estimates how a warrant move in relation to the underlying stocks or index. A delta is equals to the change in the warrant price divided by the change in the underlying share price. So basically, right, delta is a term that will determine whether your warrant is in the money or out of the money. Okay, so the probability that a warrant will expire in the money with value, an indicator. For example, if a warrant with a delta 20% has a 20% probability that it will expire with value, and 80% chance that it will expire worthless out of the money, basically. So if for put warrants, they have negative delta because their prices increase as the underlying stocks falls. So it's the other way around. But how you see delta is here. On the life matrix, the terms, we also provide delta. So delta 18.5%, which simply means it has 18.5% probability that it will expire with value. So delta will change. It will change if the underlying prices changes as well. For call warrant, for example, if the underlying goes up further, and then your strike price is already in the money, right? In the money, so the delta will go up. The further it goes, the further in the money your warrant will be, and the more value there will be. So when your warrant is in the money already, the rate of time decay is lower already. So which means you are not you will not be affected by time decay if you hold your warrants long enough. So basically that's what it means lah. But uh in the money warrant tends to be a bit more expensive on the bid price, right? So if you trade warrants before you understand this, in the money warrant trade the bid price tends to be more expensive than the out of the money warrant. Okay, so that's one of the important Greek that I want to show to you lah, delta. Other than that, I think you just have to read and understand what it means. Basically, you don't need to understand to filter it in on your trading, right? Okay. All right. So warrant sensitivity. Basically it is determining like the warrants that you choose, right? Whether it's sensitive or not. So basically, the lower the number of ticks, this is on the life metric. The lower the number of ticks, the more that sensitive the warrant will be, and vice versa. So vice versa, which means right, if your number of ticks, sensitivity is bigger, which means it's not sensitive. The lower it is, the more sensitive it is, right? So I give you an example here, right? Which YTL call warrant is more sensitive? Can anyone comment on? Can anyone comment which one is more sensitive? I'll just give some time for you guys to comment lah. Right? So this is the answer. All right. Okay, that's actually a mistake. It should be YTLC1L, sensitivity 3.28. All right. Apologies on that. YTLC1L. So the lower the number of ticks, the more sensitive the warrant will be. All right. So it's C1L. Okay. The answer is C1L. Right, not a mistake on my side. All right, so the next term is effective gearing. Effective gearing, like I mentioned just now, if if an underlying move by 1%, if your warrant say that the effective gearing is 12%, which means for 1% move in the underlying, your warrant will move 12%, right? So the higher the effective gearing, the more the rate movement of your warrant will be. Okay, so but a higher effective gearing warrant simply means that it's a warrant that has a higher level of risk, right? Because if your warrant would go down by 1%, that 12%, sorry, if NLM goes down by 1%, that warrant will go down by 12% also, right? So it's a double-edged sword. It can go up 12%, it can go down 12%. So the higher the number of effective gearing, the riskier it is. The riskier it is, but it'll give the probability of giving you more profit is higher also. So that's what it simply means, right? How you want to get know the effective gearing is it will be shown on the live matrix also, the term side, right? So later I'll go through the website. All right, so just going through this, I explained this earlier also. What variables that will determine a value of a warrant? First one is the rise, the increase or the decrease in share price. Okay, and second one is the exercise strike price increase and decrease. Sorry, exercise price do not increase and decrease. Basically, the level of the exercise price and the strike price. So for a call warrant or put warrant. So for example, call warrant, the higher the exercise price, the less likely the call warrant will be exercised. So this simply means that an exercise price or a strike price would tell you if your warrant is in the money or out of the money, depending on the movement of the share price. Like I said just now, it also relates to delta, right? So if your share price is around 7 ringgit and then your exercise price is below that, which means this is for call warrant, which means this is already in the money, right? So the higher, if the exercise price is higher than the share price, less likely the warrant will be exercised. This the out of the money warrant. So out of the money warrant tends to have lower delta. So it relates back to the delta. Delta, exercise price, share price, everything is relatable, right? So that's what it simply means lah. And then expiry date. So the longer the expiry date, like I say, the lower the rate of time decay. And then if you invest in warrant that is in the money, and then it has a higher rate of delta, all right, so the rate of time decay also will be slower. So it all relates to each other, right? And then last one is implied volatility. So IV is something different. So implied volatility, or IV we call it, it says the increase and implied volatility of a similar option in the ETO or OTC market. So basically, IV mostly would be if you trade warrants, right? It can be shown in more of a Hang Seng index lah. Hang Seng index is because it's very volatile. The volatility of the HSI will go up and down in one day, right? So higher volatility leads to higher warrant prices for both call and put warrants, but a lower volatility when the volatility of the index itself is going down. It's a bearish market, right? So if it's a sharp decline in the volatility, which means the warrant price will also be declining. So why is this? Because market maker actually does this because we uh, uh, want to mirror what is happening on the option in the ETO or OTC market, because that is the market where we hedge our position. When we buy or sell warrants from investors, we would have to hedge our position. So that position hedge is in the options, the ETO market, exchange traded options market, or the OTC market. So the volatility depending on that market itself. So that's why it's important, all right? So I've gone through this previously, but just to tell you guys again. So this is I'm showing you how implied volatility works. So basically, price movement for warrant X on day one, right? Okay. So just to give an example, look at the table there. On day one, it fall 49% from 9:20 a.m. to 4:28 p.m. So this simply means that Warrant X is moving one tick for every 100 points. So this is normal. Your Warrant X price will be increasing because the underlying level is increasing. So this is a call warrant. From 21,600, 21,700, 21,800, every 100 point, it ticked up by 0.005, right? But next morning, highlighted in the red, Warrant X moved one tick from 428 to day one, despite the underlying remaining unchanged. So this meaning that the increase in the price of the warrant is attributed to the increase in the implied volatility. So previous day implied volatility was 49%, but the next morning, market maker increased the implied volatility to 50% by 1%. So increasing it due to the changes in the ETO market that I mentioned just now, made that warrant to increase one tick, right? Despite the underlying level remained the same from the previous closing. So this is how implied volatility affect the price of your warrant. It can go the other way around as well, right? So price movement of warrant Y on day one. On day one, 9:20 a.m. to 4:28 p.m., it goes down by every 100 points. And then it goes down one tick for every 100 points. 11%, 0.105, 0.10. The volatility stays the same throughout the trading hour. But the next morning, look at the red one. Look at the red, highlighted in red. 9:15 a.m. Market opens. Underlying was at 21725. Underlying actually went up from previous closing, but warrant price did not change. It maintained from 0.10 to 0.10 the next morning. This is because the implied volatility was taken down 49%, down 49%. So why? Because the movement in volatility of the exchange traded option was decreasing, and we had to reflect the market. So basically, this is just an example. I'm showing you how implied volatility works. Okay. This might not be a real something that's happening in real life, but it's for illustration purposes for you to understand how implied volatility will affect the price of your warrants. So because some of you actually asked for me to explain this. So this is how it works basically. It can affect the price of your warrants. It can go up or it can go down. Okay. Any questions? I'll leave it to the Q&A later. All right. So let's go into the strategies. So strategies, before we go to strategies, you need to understand some of the terms: in the money, out of the money, and at the money. So how you can determine this is you look at the exercise price and the current underlying price. So basically, for call warrant, your warrant will be in the money if the underlying price is above exercise price, and it's the other way around for put warrant. Okay. Right. So, for example, you encounter you encounter a stock or an index that is going to be bullish, right? It's going to have a breakout, right? Okay. Expect the S&P 500 to rebound after 5 consecutive days of sell-off. But you have insufficient capital to get substantial exposure from futures, from buying the futures contract directly. So what you can do is you consider to take position is in Macquarie's S&P 500 call warrants to gain leverage exposure to the movement in the US market. Why our call warrant is because our call warrant is based on the futures itself. So the futures, the S&P 500 futures, the E-mini futures actually traded 23 hours. So even though the US market is closed, the Bursa market opens, the futures still open, so it's still trading, right? So that's why we follow the futures, right? So you can consider to take S&P 500 call warrants to gain leverage exposure to the movement in US market. So this way, you will use lesser capital, and then there's no margin call if you enter, as opposed to if you're entering the futures contract, right? So how you can do this is you to enter in the warrant when you see a breakout, you can use the moving average lah. So I'm showing you a basic way of trading warrants. So example, you enter into S&P 500 call warrants when the 8 days moving average and 50 days moving average is wide between each other, which means it's very, very well separated. Okay. So this is the 8 days, and this is the 15 days moving average. So it's well separated, right? Right. So and then for type of warrants you can choose is consider to choose a more responsive warrants. More responsive warrant means that that warrant has a higher rate of sensitivity, and then you can also place a stop loss order for risk management purposes. So just as how you place a stop loss for stock, you can do for warrants as well. I will go through later on my slides. Okay, so back on the strategies. Right, if you apply that strategy in August, you can see that it has some bullish trend also. So and then the focus warrant for S&P 500 that we have right now is S&P 500 C56. Okay, so in August, from 4th August to 15th August, the features actually went just by 2.2%. 2.2% in this 1 to 2 weeks is okay lah, I guess. But if you were to trade call warrant on this index feature, right? If you bought the call warrant on 4th of August, 0.22 cent, and then on 15th of August, it went up by 0.30 cent, right? So basically, the profit that you made is 36.4%. Right? That's more than if you just invested in the futures itself. So basically, that's what leverage means, right? It'll provide you a higher rate of return than just invest in the underlying itself. Just simply, that's what it means. Okay. So this is a very basic trading strategy that I will show you lah, using moving average, 8 days and 50 days moving average. Okay, so now is you can also trade warrants by hedging, right? By hedging, which means by defending yourself against the probability of bearish or downturn market. Okay, so using put warrants. So before a volatile or high risk event, the day of economic data or the day of an earning release, or when the market is expected to be bearish, right? Or Trump is going to announce something on the US market, but people are expecting to be bearish, or there's a rise in the OPR, and then people just don't like it. Investor sentiment is very 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 bad. Okay, and then you have some shares, some US shares that you hold, but you're unwilling to sell any potential shares in your portfolio, and you want to reduce short-term downside risk. So what you can do now is to trade warrants. Consider to take position in Nasdaq 100 put warrant to protect your US stock portfolio. So this way, you just use small amount of capital to protect against any downside move in the affected underlying. Right? How you can do this? Similar to bullish movement, the bullish strategy that I showed you. The technical indicator is for the price to stay below 8 days moving average and 50 days moving average, and you enter when the price breakout is at the previous below the previous low. Okay, so here when you determine on the chart already, there's a breakout, right? And then 50 days, 8 days moving average, and the price stays below 8 days and 50 days. So you consider put warrants with a longer expiry date and hold the put warrant as a hedge until the event is over. So why longer expiry date is because the rate of time decay is also slower. All right. So you have the function to actually hold warrants without actually losing to time decay. Okay, that's what it simply means lah. Okay, so just a case study, show you what happened with NDX features. So the focus put warrant is NDX HM, right? When NDX feature went down, what happened to the put warrant? So when the NDX features went down from 31st July to 1 August, so this is a very short-term example to you guys, went down 2% in these few days, 31 July to 1 August. The put warrant actually went up by 17% from 20.5 cents, 0.205 to 24 cents. So this is if you were to hold in a very short term or overnight, as what we told. Okay. If you're to hold overnight, you have made a 17% increase when the NDX features went down 2%. This is put warrant. Okay. So this is how you view it, basically. All right. You can also trade warrants for pre-earnings trade. So when you think that is earning, like I'm showing you an example of YTL Power. Then YTL Power on 21st of August had an earning. So if you track YTL Power and you know that they're about to report, and then what you can do is you can consider to buy call warrant over the stock, because you have the expectation that YTL Power will be going up 3% post earnings, or 2% or 1%. All right, you can consider to buy call warrant. If there's a put coverage, consider to buy call and put at the same time lah, so you can able to capture both price movement. But because we don't have any put warrant over YTL Power, can consider to buy just the call warrant. And how you can do this is enter at least 3 days before the earning announcement. Choose at the money or slightly out of the money warrants for lower capital outlay, because the bid price will be lower. And then choose, or you can choose higher sensitivity warrant for faster break evens. So the more sensitive it is, it just enables smaller movement in the stock price for your warrant to gain by a tick. So in this case, you can also set a stop loss order for both call and put warrants. Okay, so this is just example, show you how you can use trading strategies with warrants. All right. Okay, so going into the tools. So we are viewing the live matrix. So what essentially live matrix basically is the point of price from where you want to buy and on where you want to sell. So by looking at the live matrix, it actually provide transparency because we show you the real-time warrant buy and sell prices, and it enables you to facilitate effective foreign trading plan. Okay, so the live matrix also shows the warrant tick. One tick of the warrant is 0.01 if it's above 1 ringgit. If it's below 1 ringgit, one tick is 0.05. So normally for structured warrants, they are below 1 ringgit lah. For generally all the warrants, one tick is 0.005. So just remember this. Why? Because if you were to buy warrant on difference of the tick of 0.05, which is tight spread, we call it tight spread. On the left here, SP 500 C56 is a tight spread warrant. So if you buy tight spread warrants, you usually buy on offer, right? If you buy warrants, you buy at 23 cents. And then for you to break even, it's just one level difference, 23 cents, and sell here at 23 cents. This is just for you to break even. But if you buy on a warrant with a spread of more than 0.05, or like a wide spread lah, call it. Okay, so S&P C52. So the warrant bid and the warrant offer is above 1 ringgit. So which means one tick is 0.01 lah, 1 cent basically. But if you were to invest in C52, you buy at 136. For you to break even, the level is higher here, 136, and then sell back at 136. That's why you don't normally buy warrants on a wide spread. I would say do not buy warrants at wide spread at all. Okay, so it'll just make you at a disadvantage. Okay. So difference between this and this is around more than 1 cent. So that's why it's called wide spread. And then for you to sell back, to even get a break even, you need the features to go from 644.515 to 6454, right? Instead of just like from here, for you to break even on C56, 23 cents, sell back at 23 cents, 6462.75, 6463. So not that much difference compared to C52. That's why I do not trade into warrants that have widespread. If you don't understand, you can just ask questions. Later I'll answer on the Q&A. Okay. All right. So how the steps for you to select warrant? How to select warrant? So basically, first, you take a view on the underlying. Let's say you want to trade S&P 500, right? Because Trump is announcing something, or you want to trade Nasdaq. Okay, let's try Nasdaq. Because Trump will be announcing some tariff, another new set of tariff rule or something like that. Then for you think that the market will go, you want to short the market, right? Or you want to long the market. So you can choose whether you want to trade call warrant or put warrant. Call warrant to long the market, put warrant to short the market. All right. So after that, set trading time frame. So depending on your trading profile, are you a day trader? Okay, or are you someone who wants to swing trade, or you want to trade longer term? So you have to choose the expiry for the one that that is depending on your trading profile, basically the one that you're comfortable with. And then effective gearing, also find the right balance of risk and return. Actually, don't just straight away go for the highest effective gearing. Okay, because sometimes highest effective gearing also means the warrant is low delta or something like that lah, or expiring, right? So look at warrants with effective gearing that is acceptable. Okay, I would say look more at sensitivity. What kind of sensitivity that you want? Do you want that warrant to move faster, or do you want it to not move as fast because you will be holding that warrant for a couple of longer terms, all right, for 1 to 2 months or a few weeks, for example. And then liquidity of the warrant. Liquidity is basically how easy for you to enter and exit your position. Okay. So from here, right, you can actually use our warrant search. You can QR it and you will straight away go to our warrant search. You can use our warrant search. Step one, okay. So basically, step one is put warrant or put on a call warrant, effective gearing, expiry, and step four is the bid and ask volume. So basically, I'll go through with you with example of Nasdaq. So Nasdaq, assuming you wish to trade Nasdaq, right? So you had here US indices, 3 to 6 months, effective gearing. You just want to see what if the gearing that we have, right? So from all these options that you have, you decided to go for NDXCM because you think that the tech company will have an annual report soon, be reporting soon, right? And then be positive soon. So you want to gain leverage on that news, right? So you enter position NDXCM. And why you choose CM? Maybe because effective gearing is according to what you like, or the bid and ask price is according to your budget, or basically the expiry is according to what you want, or your trading profile, your trading profile basically. So that's why you choose NDXCM. So this is example. Okay, let's say you choose NDXCM. Next, you will go to the live matrix. Go to live matrix, map up your trading plan. First, determine the entry and exit level of the index, which is the NDX. Assume you wish to enter at 23,450 and exit at 23,700. What is the entry and exit price for NDXEM? So 23,450 entry price is 19 cent. You buy at 19 cent. And 23,700 is you sell at 21 cent, right? So based on the live matrix, basically your potential gain if you did this will be 10.5%, while the underlying actually went up just 1.1%. So that shows the leverage. Okay, that shows how much it goes compared to the underlying. So this is how you map out your trading plan. So what if you want to sell your position, right? What if you want to sell your position? It's the other way around. Okay. Basically, okay, buy and sell. What if not sell your position? What if you want to manage your risk by putting a stop loss? Like stocks, you can also put a stop loss for warrants. So assuming you bought NDXCM at 210 and want to set a stop loss at 19 cent. So 210, right? You buy here and you want to sell here. So basically your last defense is actually the last caller here, right? 23470.5. That is the last price where you can sell at 19 cents. Afterwards, if it goes down lower, it will go at 18.5 cents already. So this is what Life Matrix shows you lah, basically. Right. So moving on to the risk and risk that is associated to trading warrants. First is the market risk. So market risk is when you buy warrants, there is risk of global news like Trump announcing tariff or Trump announcing a war on a certain country, for example, right? So there's a market risk if you hold warrant over US index or Hang Seng index also, because these are global indices, right? And then there's exchange rate risk. Exchange rate risk is not too much lah, because usually for like Hang Seng, our exchange is quite fixed already lah when you buy into certain warrants. So exchange rate won't actually affect the price of your warrants. Another one is gearing. So gearing, like I said, is a double-edged sword. So if your warrant can go up by 12%, it can also go down by 12%. So be careful when you trade the warrants also. just choose the gearing according to your risk appetite. Okay, and then limited life is basically the expiry. So do not go into warrant that is less than 1 month expiry if you want to swing trade. If you're a day trader, you don't look at expiry. You just look at the other aspects like sensitivity or the effective gearing itself. But if you're a swing trader or you holding a longer term, do not go than 1 month expiry because the rate of time decay is higher when it's closer to the expiry date. Okay. All right. So some facts about warrant. How do I know if an underlying has a high liquidity? Basically, you just look at the traded volume, right? The higher the traded volume of the stock, which means it's a liquid stock basically, right? But for warrant, it's different, right? For warrant, because you have market maker provides liquidity. Like I said initially, market maker provides liquidity. So if there's no trader volume, zero, even zero, lower or even zero, but the bid volume and ask volume is high, like call warrant X, right? 2 million on each side. That means that you can actually buy and sell with market maker itself, with Macquarie itself. You don't need to look at the trader volume, right? So trader volume in warrants, I would say, is something that you don't even have to look at. Okay, sometimes even high trader warrants does not equal to good warrant. Maybe they are trading warrants that are going to expiring soon, 1 month, right? For example, Hang Seng, people are chasing what other investors are trading in, right? So they're riding the trend basically, right? But they don't know what they're getting in yourself into. So if you want to trade warrants, be careful. Like I say, look at the bid volume and ask volume. 2 million, on each side. Even though the traded volume is zero, you can still buy and sell with Macquarie. You can still make one take profit with Macquarie. You can still hold long term and invest with Macquarie. Okay, so you don't even need to look at this traded volume, right? So call warrant X in this case is the better warrants lah. Okay. So index, all index underlying tricks the futures, not the cash index. Hang Seng futures, Hang Seng Tech futures, Nikkei futures, KLCF futures, S&P 500 futures, Nasdaq 100 futures. Okay, so even all the futures contract has a rollover. Hang Seng Tech rollover every month, KLCI every month, S&P 500 every quarter, Nikkei every quarter. So why? Because you don't want to be losing by looking at a previous contract, right? So I have client who ask me, investor who ask me, Afiq, I'm trading this, but why is my warrant not moving? It's because they are basing their warrants on previous month contract, but we have it roll over into September contract. They are still looking at August contract. So it's wrong, definitely wrong. So you need to understand that all the index warrant tracks the futures itself. Futures will roll over their contract every month or every quarter. Okay. All right. So this is the market making hours. Market making hours is available on our website. I'll share with you later on our website. Okay, so I'm not done yet. So this is our hotline. You can call us later, but I'm not done yet. I want to show you our website, right? Can you still see my screen? Shin, can you still see my screen?
Yes.
Okay, right. I'm not done yet. Just give me about 5 minutes. I'll go through the website. Okay, so this is the live matrix. For example, this live matrix. This is our homepage lah. Our homepage. Trending warrant basically is the focus warrant. The warrants that is good compared to other warrants that we Macquarie itself issue, which means 99 Smart C12 is the focus warrant instead of other 99 Speed Smart warrants that we issued. EcoShop, same thing. Hang Seng, this is the TWKC, PWLA. I talk about liquidity, right? TWKC and PWLA has the highest liquidity, 12 million units. Okay, so how you see that? Go to warrant search. Warrant search under warrant tool, right click, go here, right? So HSI, Hang Seng Index. Let's look at Macquarie only lah for now. Okay, so TWKC, this year bid volume 12 million, ask volume 12 million, right? CWKC 12 million, CWIM 12 million, PWJS, PWLA all 12 million, which mean all of these warrants. right? All are the better warrants. But if you are investor who wants to trade on the more sensitive warrant, you can filter out using here sensitive, or here green here, so sensitive. So when you see here, the most sensitive one is CWG6. All right, but it is expiring this month, so not advisable for you to trade and hold. Okay, right? So you can filter in sensitivity. You can also filter in by let's see, traded volume. Also, you can see lah. You can see which warrants people are focusing in. But like I said to you, because these warrants are usually can sometimes be warrant that is not a good warrant, maybe expiring soon, or very low delta, or just not sensitive, right? You see here, 96.2 sensitivity. It's not moving according to how fast you want it to be, right? You can always just filter out and trade into more sensitive warrants. You have CWIH, CWIQ. So IQ is at 4 million bid and volume. So basically what it means by 4 million, right? If you have 4 million units hold, if you're holding 4 million unit, already bought 4 million unit, for you to sell back at 4 million unit, it's easier compared to if you have been holding 4 million units, but you want to sell back CWIH, right? At 500K. So your queue to sell will be staggered lah, 500, 500, 500. So it'll be lesser lah, and then some other people will be queuing also. So it'll take more time for you to sell lah. But for you to sell one shot, in CWIQ at 4 million unit is much easier. So essentially, it's the rate of how fast can you enter and exit in that warrant itself. So basically, that's why liquidity provided by Macquarie is important. You don't even have to look at the trader volume. You don't even need to follow other people investment. Just do your own homework. What you want. You want it to be more sensitive, then choose the warrant that you are comfortable with, basically, okay? Effective gearing also, you can filter looking at how high effective gearing you want it to be. Okay, so this one also allows you to see other people warrants submit, right? So let's look at the bid volume and ask. So Macquarie is still the highest when it comes to Hang Seng Index. Let's say that you are holding a huge position in Hang Seng, 12 million units. For you to sell 12 million units in our warrants, it will be easier. Okay, that's what it simply means. Okay, so this is warrant search. You can filter out using call warrant or put warrant. Very easy. Okay, warrant terms, something that you can use also. So basically for you to just see how has it been doing, right? NDX EM, just now I talked about NDX EM, right? So 1 week, 1 month, this is how it has been doing lah, basically. You can look at other parts of the indicator here, delta percentage. There's also a summary of what each of these means, right? So you can do your own homework here. Effective gearing, there's a summary of what it means. Excess ratio, theta. So if you click here, it will direct you to our warrants investors educational basically educational website. All right. So one thing I want to show to you is also the warrant heat map. So if you want some ideas on what to trade, right, on which one is bullish or bearish, you can always go here. All right. So for example, S&P 500 here on this day, 4th of September, all right, Thursday, there's a bullish trend. There's a green pentagon, which means green pentagon means there's an up signal, So up signal means there will be a bullish trend. Okay, so if you want to ride on the bullish signal, so you can actually just trade into these two warrants lah, S&P C56 and 54. This one will also show you the difference between these two warrants. All right, this one expiring in September, this one expiring in December. Okay, so you can use this, utilize this, okay, to help you in trading warrants. Comparison. Okay, this is what I like the most lah, basically. So let's just say NDX, CM, and CL. Let's just compare. So this is, if you don't know which one to choose, you can just use this tool to compare. Okay. Basically, it will show you, okay, success ratio, different expiry, different bid and ask price. This one is much lower bid price. This one is much higher bid price, more expensive. Yeah. So delta about the same. So basically, these are all tools free, available for you guys. You guys just need to go to our website. What you can do is just type on Google Malaysia Warrants. Okay, even if you do that, the first one is already Macquarie. Just click onto it. This is our homepage already. All right, and if you want to read on news, this is daily highlight. This is what we talk about. This is article based on our research article. Malaysia strategy talks about bank sectors, telco, what's going to happen soon. We have overnight market. So basically every morning we will update you on what happened in the US market. Okay. So all right. So one thing about live matrix also that I want to show you guys are you guys can click up to 9 matrix at once. And then bottom here is basically already the market making hours. You can see here already. You don't have to scratch your head and find where to find all this. It's already down in the live matrix. From what time to what time does the Hong Kong index HSI open? 9:15 a.m. to 11:50 a.m. So this is the market making hour. After that, it's lunch break already, and then after lunch break, 2:30 to 4:38. So 4:38 is the last time lah, basically. Right. So okay, I'm done on my side. I will pass to Shane for Q&A.
Yes, if any question to ask our speaker Afiq Suhaimi, please write your question in the Q&A box here, not the chat box.
Okay, I see some
Okay.
one question from Yuk Long.
Yes, the first question is might not be a question but a suggestion, right? Can Macquarie issue more put warrant for Hong Kong and Malaysian stocks?
Okay, can Yuk Long, can you just provide what what example do you want for Hong Kong stock? Okay, so I tell you first, why Malaysian stocks don't have or have few put warrant is because the hedging itself. So if we invest in, I mean, sorry, if we market maker sell call warrant, right, to investors, at the same time we need to hedge. So when we hedge, we either we hedge by buying the underlying itself lah, the shares itself, right? So if we call warrant, if we sell, we buy the underlying stock. But put warrant, if we say you put warrant, oh, if we just buy the underlying itself, isn't it going to be the same trading strategy? So the reason why we don't have enough put warrants in the market, even from other issuers, is because the lack of hedging, on the underlying itself. So when it comes to Hong Kong stocks, for example, right? Hong Kong stocks, there's swaps, there's options, Hong Kong stocks, right? There's even warrants on Hong Kong stocks that we can buy and sell, we can hedge. So there's more variety lah. There's features that we single stock features also, and all of these varieties, they have some tradable volumes. But for Malaysia stocks, the option is just Malaysia stocks, only the shares. So that's why we don't have enough put warrant for Malaysian stocks. But for Hong Kong stocks, we can do. So if you have any suggestion on what Hong Kong stock you want to trade, you can just let me know, and then we will include it in our next issuance for just for you. We can cater that for you. So if you want to trade it, if any of you want to trade any Hong Kong stocks, but of course there'll be a certain criteria lah. But just provide us the name, just suggest to us, try to look into it. Okay.
Yep, that's very nice of you, Afiq.
Yeah, we can do that. Yeah, we can do that.
Okay, let me see if there are any more questions for Afiq.
Right. Any questions on the chat box, because I can't see the chat box from my side.
Mm. Okay, so next question from Ricky is that how often does the market maker change the implied volatility?
Okay. Depends on the underlying. So if you're talking about Hang Seng Index, it's overnight. And if overnight volatility changes, make there's changes in overnight volatility, then we have to adhere to that lah. We have to follow it. If there's no changes, then we don't change. So it depends on the market. For Malaysian stocks, very lesson. Unless there's a 20% increase, 20% decrease on a certain single stocks, then we have to make some changes lah. So that's also to protect investors from any sharp decline movement also. So that's sometimes made changes on the volatility of the war. Depends on the underlying. To answer you, depends on the underlying. depends on how volatile the underlying is. So usually, the one that we are usually affected, the impact volatility will be Hang Seng Index lah, because Hang Seng Index is very volatile.
All right. So any other questions for Afiq?
So anything else? Okay, so I'll just put my slides here. This is our hotline, right? If you have any questions, you feel free to call our hotline, um, or you can email us as well.
All right. If there are no questions for Afiq, then I'd like to thank Afiq for sharing with us about structured warrants. So if you have any question, you want to reach out to Macquarie, or you want to give them a suggestion of what single stock in Hong Kong that you want to trade, right, for the warrants, you can also write to them, okay, at info@warrantsmalaysia.com.my, or call them at 0320598840. Thank you so much, Afiq.
Thank you, Shane. Thanks, everyone.
Right.
Just
We have another
remember
speaker
to call
coming
me
up.
back. Yep.
All right. So I can take over the screen control, yeah?
Yep. Thanks, Shane.
So we have another speaker coming up. Okay, so he will talk about momentum trading. Okay, so he is the founder and chief trainer of Shareworld Consulting. He's also a dealer representative with TS Securities. He applied technical analysis in his trading, mainly focusing on share movement analysis, price volume analysis, indicator candlestick formation to observe the buying interest and selling pressure and further justify the key support and resistance level. His forte is in understanding the movement of buyer and seller through the distribution area of banker chips. He is also a regular speaker for a number of financial institutions to train their clients in trading. They include Kenanga Investment Bank, Macquarie Capital Securities, Malacca Securities, TS Securities. He was also invited to speak for Investing Note at SGX, as well as other tertiary educational institutions such as Utah, TAR UMT, and UUM. Having 30 years of market experience, he has trained more than 2,000 students with trading strategy from 2019 to 2021. Academy-wise, he completed a certificate and professional level from Institute of Chartered Accountant in England and Wales. He also passed level 1 of CFA. So it's none other than Mr. Yong Chee. I will call him YC, right? YC, good morning. How are you today?
Morning is doing well. Yeah, thank you very much, and good
Right.
morning to all the participants.
Okay,
Yeah,
great. Can't wait to learn from you about momentum trading. So I'll stop sharing my screen and hand over the control to you.
okay, thank you. Let me share my screen. Mhm. Okay, so all
Fantastic.
good?
Yep,
Okay,
all good.
thank you. Okay, so today we will be talking about momentum trading in the US market and also the Bursa market. So, first of all, as usual, this is the disclaimer. All the information shared for this from this sharing is not any like buy or sell recommendation. It's just purely for the educational purpose. Okay, so this is basically my background. So, just now, Shane already shared it, so I will just skip it. Basically, we focus more on the technical analysis. Okay, so for today's topic, we will be talking about including breakout trade, price volume analysis, how to spot a false breakout. I think a lot of people fall into this, like cannot really trade well for the breakout because they basically like chase high. Okay, so also we will also identify what is the exit zone if you want to trade a breakout, followed by a lot of case study for the Bursa market and also the US market. So first of all, what is a breakout trade? So a breakout trade is used to enter during a trade when the price break the resistance zone. Okay, so a real breakout comes with increased volume. Okay, so basically all the information shared here is the technique, is the actual trading technique that we usually use for the real life trading strategy. Okay, so basically breakout indicates a raising buying interest. It means that a lot of people is buying the stock. Okay, that's why the volume is increasing, creating a huge momentum. So usually buy on breakout potentially gives a greater return because the momentum will drive the stock price higher. Okay, so some of the people, they prefer to buy during support zone, or they prefer to, bottom catching. When the price starts to fall, then they will start to average down, or they will want to so-called collect it and wait for a long time for the stock price to rebound. So that one is another strategy that can be used in trading. But for us, we focus on breakout because we feel that breakout is faster. Okay, it saves a lot of time for us. If you want to catch the bottom, if you want to buy during support, or you want to, average down and wait for many months or even 1 year for the stock price to, rebound, or for the company to turn around, okay, it could be a way, but it's not suitable for us because for us, the time is also a cost. Time. So the waiting time is if too long for us, then we will usually not consider that strategy. So this for own preference. So today we will be focusing more on the breakout trade. So this is one of the strategy. Right? It is basically commonly used in the breakout strategy. It's called a neckline breakout. So we can see the picture here. The neckline breakout, basically it means that it breaks above the resistance. It breaks above a consolidation resistance. It means that, very simple, the engine is about to start. Okay, because all the while the stock price is being rejected at the resistance zone. Okay, let's imagine this until one day the momentum is huge enough to break above the resistance. It means that something is happening. The something might not be the thing that we know. Okay, probably it's due to the company is going to announce a very good news, such as a very good quarter report, or it will have a MOU, memorandum of understanding, or be awarded with a contract. All those kind of hidden news that we as a retailer, we wouldn't be able to know, but the stock price already moved. Okay, so I believe most of the participants here, you have already seen this kind of situation before. Means that those stock price, they will move first before a good news being announced, or it will drop first before a bad news is being announced. Okay, if you feel this, comment one for me. Means that during your trading journey, you have already seen this kind of situation before. The stock price will move first before the those news being announced. Okay, so if we want to trade breakout, we will usually monitor the stock price movement. So we will see the stock price to trade it. We are not following any news. Okay, so this is one of the example, like this SCG Berhad. Okay, basically after the stock price going out, you will be hearing a lot of those rumors, such as, oh, a lot of fund house is buying this stock. Okay, a lot of institution is buying this stock. Okay, but if we are trading based on the technical analysis, we are trading based on the breakout, neckline breakout strategy, or any breakout strategy, you will notice that as time goes by, the stock is being pushed up higher with increasing volume. Means that the volume is very promising. It's not like it's going out, but the volume is very little. Okay, it's like going out, follow with a very satisfying volume. Okay, so in this case, after that, you will be hearing like, publishing a very good QR, or, like getting a lot of contracts kind of thing. This one is the SG Berhad. So a lot of this kind of the, stock actually in the market. Just that a lot of news we are not able to get in a first-hand basis. We have to follow the technical analysis. So this is another we call it formation. This one is another type of breakout. We call it triangle breakout. Okay, so triangle breakout actually got a lot of types. Okay, for this one, is symmetrical triangle breakout. It means that it's like, both direction. contracting. So making it to form a potential breakout. Okay, so in this case, we can see that it's supported with a trend line, uptrend line, and also is rejected with a downtrend line. So it means that the stock price is moving within the zone. It's moving within this zone, this so-called triangle zone. So whenever it's consolidating, until one day, we call it should choose a direction. Okay, not necessarily it will break out, it might break down. It might break down. So for us, usually we will wait for it to form the formation and also to choose the direction for us. Choose the direction for us. Okay, so in this case, let's see this example. This one is Suncoin. Okay, basically we can see that like just now the SCG Berhad and this Suncoin, even though it's a very big cap counter, we can also apply the technical analysis in those big cap counter. Okay, it's not necessarily means that the technical analysis can only be applied in the mid cap or small cap counter. Okay, basically technical analysis can be applied in everywhere. As long as you're able to spot the formation, you're able to know the basic behind it, the theory behind it. So in this case, we can see that all the while, the stock price is moving within the zone. Okay, until one day it start to move out of the zone. So in this case, it's moving out. Okay, it's breakout. It's a breakout. It's not like a breakdown. So for us, we wait for it to choose the direction for us. So it choose to move out. That's why for us, we were able to see that it's a potential uptrend. So basically, in trading world, okay, we cannot say 100%. There's nothing as 100%. We can only say that it's higher chance. So technical analysis allow us to trade with a higher chance basis. So whenever it's breaking out, we feel that, okay, now our advantage is bigger. If we going to buy the stock, our advantage is bigger. Our winning rate is bigger. That's why we apply all these in order to increase our winning rate, not to say 100%. Okay. So secondly, let's go into the price volume analysis. So this one is more technical. If there's anything you want to ask, can type in the chat box. So we will see after our presentation is done. So there will be a Q&A section. Okay, so price volume analysis. So what is price volume analysis? PVA, we call it PVA. So you might be hearing a lot of those people sharing those like PVA. Okay, but actually price volume analysis is to better understand the stock price and the volume movement. Okay, it can be applied on stock, or you want to apply in other asset class. Okay, such as future or etc. All can. Okay, but in this case, we will be focusing more on the stock market. So it involves analyzing an asset price action and the volume over a set of period. Okay, so price and volume analysis aim to help trader to identify the trends and make an informed trading decision. A lot of people, they might be using indicator. Okay, I believe most of us will also use indicator. Okay, me myself, I also use some of the indicator, but not a lot. But today we will only focus on the candlestick pattern, candlestick formation, and the price volume analysis. Okay, so in this case, the price volume analysis is very simple. It only involves price and volume. Price and volume. It is excluding all those other indicators. We call it bear chart. Bear chart means that it's an empty chart, no other indicator to mess it up, just a bear chart, a very clean chart. We use all the raw data, price, and also the volume itself. So let's see, price action. So if seeing the chart movement, if seeing only the bear chart, if we're able to read the chart movement, we have to understand how is the price reacting, how is the price moving now. So this is the main purpose of understanding the PVA. Okay, it means that we do not rely on any other indicators, such as I think some of us might use the MACD, RSI, moving average. Yeah, I also use moving average, but usually I will also compare the bar chart. Like for example, I will have some of the indicators. So if I want to confirm the price movement, I will delete all the, we call it removing lah. I will remove all the indicators. I will see the bar chart for one time. Then to confirm it with the chart with indicators. So that one is for the confirming purpose. Okay, so seeing the bar chart itself, it will give you a very detailed understanding, because you can only rely on the price, which is the candlestick formation. In this case, in this picture, you can see there's only candlestick pattern, candlestick movement, then followed by the volume. Then you have to analyze it, whether this is what is the formation. Will it be any like potential breakout? Is there any chance that you can enter into a trade, kind of thing? Okay, so understanding the volume. Basically, volume means that we call it the trading volume. Some of the traders, they might see the weekly volume, daily volume, 15 minutes volume, 1 hour volume, okay, etc. But what we will suggest is that you have to at least see the daily volume. Daily volume for us is the most important one. Most important. If you want to further confirm, you can see the weekly volume, or we call it weekly chart. Okay, but the daily chart is the very basic and very important one. At least you have to refer to that. So usually we will need to see, or we will prefer to see an increasing trading volume. Okay, let's say a stock price falling down a lot until bottom stage, it should also be supported with an increasing bottom volume. Okay, then for a stock is going to break out. Once it's broken out, we will also prefer to see an increasing volume. So increasing volume is very important to us. Okay, but if you want to talk about more details, different stage, different kind of volume we prefer to see. For example, if a stock price is being churned out to a very high price already, then if during the high zone, a lot of daily high volume come out, the one we do not prefer, because the stock price already, being churned out to a very high zone already. Okay, so that moment, if a lot of those high volume and high dropping volume, we call it the red volume bar coming out, the one we do not prefer. Okay, but if a stock price is going to break out, just started to break out, or is being supported at the bottom zone, then that one with increasing trading volume, we will usually prefer it, because it means that some player is coming in. Okay, especially during the breakout. If during the fresh breakout, some player is coming in with a huge volume, means that, oh, this one is a solid breakout. Okay, so other than the volume, let's understand the price. Okay, price basically, it means that 4 prices lah. Okay, the 4 prices identified by the candlestick. Okay, it means that the high price, the low price, the closing price, and the opening price. Okay, for us, usually we will focus on the opening price and also the closing price. Okay, so some of you might ask, hey, why we only focus on that 2 prices? Okay, not to say that the low price and the high price is not important, just that we focus more on the opening and closing due to that 2 prices are the prices that most unit, most share are exchanged at. Okay, for example, during the opening, a lot of people might key in different prices, but they will all be matched during the opening. So opening, it gives us a very significant signal, very significant info. The same goes to the closing price. Okay, because for the auction period. So before the closing time, 4:50. Okay, a lot of people, they can key in different prices. So those price that being matched, okay, will be the closing price. So the closing price and the opening price is the price that basically most trades are done at. Okay. But for the low price and also the high price, it might get hit only a bit. Okay. For example, someone throw down, so throw to a low price, it might only get hit a bit, like one lot. It might be the case. And also, if the stock price shoot out in a very sudden basis, like during a 15-minute zone, okay, it shoot up a lot, then it start to retrace. So the high price being hit could be a very little volume down only. Yeah, so we can refer to the high and low as the resistance and support, but it's not as important as the opening and the closing price. Okay, able to get it? So price and volume. Then in the Bursa trading itself, especially during we call it the Bursa stock. The Bursa stock is not for the US stock, it's only for the Bursa stock. This classic price action, it has been proven many, many times. Not to say 100% again, because there's no 100% in the market, but remember this price action. You have to remember this, because this one, we have been, during our past many, many years of trading journey, we have seen this classic price action for many, many times. Okay, it means that whenever a price shooting out, it should follow with we call it increasing volume. Okay, increasing volume. Okay, then the very good pattern is that whenever it's retracing, the retracement volume should be low. Should be lower than the uptrend volume. It means that this one is a strong uptrend, because, okay, so some of you might ask why. We have to know this. Whenever a price is going up, why it should be followed by an increasing volume? Like I mentioned just now, it means that some player is coming in. Some player is coming in. Okay, we don't know who is the player. It could be institution, it could be hot money, it could be a very, we call it high net worth retailer. It could be many party. Okay, we don't know. But following by the price action, we know that somebody is coming in. That's why the volume is a lot. Okay, those people, they want to buy a lot. Okay, so during the up zone, during the up time, it's better to be followed by a very huge trading volume. Okay, so for the during the retracement period, why we do not prefer high volume? Because if high volume means that somebody is dumping the share during the retracement zone, so we do not prefer it. We prefer the retracement to be coming with low volume. It means that only those little people, like those retailer, like those people who do not have strong enough holding power, they sell it. It's not the big player, it's not the big boy who sell it. That's why the volume is very little. Okay, it could be due to those contra player. Okay, they buy the stock and they do not have the holding power. Okay, they have to, because due to the contra period, they have to sell the share after 2 to 3 days. Okay, that's why the volume should be low, because all this retailer is selling, those small retailer is selling. Okay, so this classic price action, we have to remember, because in the case study and in all those, we call it actual trading, you will see this breakout with high volume, retracement with low volume. Okay, so this is one of the example. Okay, this one is basically the net line breakout. So whenever the breakout, it should follow with the we call it the very strong momentum. Okay, very strong momentum. Okay, after that, you can see, even though the price is going out, the volume should support also. The volume is basically more than the previous consolidation zone. Okay, so whenever the price is going up, we have to see the volume is supporting. Okay, so let's see how to spot a false breakout. Just now we talked about the breakout, we talked about the classic price action. Then we have to learn how to spot a false breakout. Okay, because a lot of people, they do not they do not prefer to trade the breakout, due to they feel that breakout means that the price already moved then only I chase in, right? Okay, a lot of people might think so, but just at what I mentioned earlier, basically is preference, I could say. Okay, some of the people, they prefer to be risk averse, so they prefer not to chase high. They prefer the stock price to go down the time they only collect, there's no wrong as long as you're able to have a long-term profitable strategy, then it should be all right. Just that for us, whenever a breakout happens, it means that potentially, like I mentioned, no 100%, potentially it will be going up. That's why we prefer to trade breakout. Okay, but it might be the chance that a breakout is a false one, a fake one, we call it. Okay, a fake breakout means that a situation where the stock price breaks above a key level means that the resistance, but it fails to continue in the breakout direction. Means that we expect it break out and continue to go up, but it break out, but it fall down. Okay, it falls back to the below the resistance zone that was broken up. Okay, that's why it become a reversal. It become a reversal. Okay, so if a lot of people, they might experience this. They do not like breakout because they traded the false breakout and they do not have a proper cut loss plan. That's why you imagine this. Let's say you traded a breakout and ended up is a false one. It's a fake breakout. Then if you do not cut loss, and the price started to be a reversal, okay, then it means that you are basically, you traded or you bought at the highest price already, close to the highest zone, right? Because once you buy, then it start to reverse, then it start to go down. So a lot of people, they do not like to trade breakout because they got such experience. They feel like, oh, whenever I break out, then I get trapped, The main reason due to they do not set the cut loss. They do not set the cut loss. Okay. So what is the reason a false or the fake breakout might happen? Okay. It's basically it might due to a sudden news in the market. Okay. Like for example, like the Trump, suddenly go and announce something, then creating a market panic. Okay, it could be the reason, it could be the worldwide reason, or it could be the stock itself, the reason of the stock itself. For example, once after you bought in, then the company announced a very bad news, okay, such as a very bad quarter report, or like the contract being terminated kind of thing, this is a sudden news in the market. So it will create a very we call it very bad market emotion. That's why then the stock will start to reverse. So all this is an unexpected one. Okay. So the other reason is due to many investors might set a very tight cut loss. Okay. Close to the resistance zone. So whenever the price retraces a bit, it might hit the previous breakout zone. Usually we will give some rooms, to be honest. But some of the people, they might set the cut loss point too close, or we call it too tight cut loss. Okay. That's why whenever the stock retrace a bit, okay, it might be healthy retracement at first, but due to it hit the cut loss of a lot of tight cut loss of a lot of investor or traders, then those prices will get hit or get dumped by those traders. Especially all this is not by the normal retailer. All this is by the robot trading, algo trading, foreign fund, as those like JP Morgan. They actually traded in Malaysian market, right? Just that a lot of us wouldn't be able to aware. Okay, they trade using algo. That's why some of the stock, okay, whenever the breakout happen, you cannot imagine how far it will go, because suddenly those foreign fund, foreign robot, they come in to trade. That's why it pushed the price higher. The same goes to when they want to cut loss, okay? Because it's robot trading. That's why like they dump the share, they dump the price, they hit the cut loss point. Then once they trigger it, they dump the stop price further. Then the other robot got triggered. That's why it's a it's a very, very bad cycle. Okay, so all this is the tight stop loss triggered by the tight stop loss. Okay, so how are we able to spot a false breakout? Okay, we have to see the following trends. If after the next few days of trading after the breakout, the stock able to maintain above the breakout zone, okay, for us it indicates a effective breakout. Okay, this is one of the main point, to be honest, because breakout, we monitor the volume and also we monitor about the breakout zone. Means that the previous resistance zone that I mentioned being rejected many times during the past period. Then one day, imagine this, it's broken out. Then for probably 2 to 3 days time, it's always maintaining above the breakout zone, maintaining above the resistance zone, the previous resistance zone. Then the previous resistance zone will now be the new support zone. Okay, the previous resistance zone will now be the new support zone. Okay, so even after the 2 to 3 days, the price is going down, the price is retracing. Okay, it's okay as long as it retraces still above the resistance zone, still above the breakout zone, then it should be okay. It should retrace with low volume above the breakout zone, then okay. Okay. So the other point is that the trading volume. The trading volume, this is the part that we mentioned just now. If the trading volume is really low during the breakout, this is not what we prefer to see. Because like we mentioned, a very solid breakout, it should comes with huge breakout volume. Okay, it means that those actual buyer is coming in, those real buyer. Okay, the price can be fake, okay, because some of the counter do not have liquidity, then some days it will be churned out a lot, it will suddenly spike. All these are, if you go and see the traded value, traded volume, it do not support. So all this we will basically skip. That's why we cannot only see the price itself. Okay, if you every day you go and monitor the KLC screener, you go and check the top gainer, for example, the top gainer and the top gainer percentage. Okay, sometimes you will see some of the stock suddenly is spike, but this kind of stock you have never heard of it. Okay, but if you look into it, the buy sell queue is having a wide spread, and also the volume done is only a few. All this is not a solid breakout because there is no actual buyer. There's no actual buyer, just basically due to some of the player, they want to, close the price higher, that's why they put some money, they use some money to close the price higher. So it's not valid, But the volume cannot be fake. The price can be fake, the volume cannot be fake. The volume means that the transaction has already been done. Buy and sell already happened. Somebody buy, somebody sell. It already get matched. It's already happened. Okay, it cannot be fake. That's why we have to see the trading volume. Okay, the trading volume, if it's huge, it means that somebody is actually really buying it. Okay, that's why we will potentially see that is a huge and solid breakout. Okay, then the other thing is that market sentiment. Okay, like we mentioned, sometimes a breakout happen, but due to worldwide news, for example, those tariff, for example, or those war. Okay, somewhere happens a war. Then this one is a very sudden news, cannot be expected. So it will cause the market sentiment on the next day to be very bad. That's why negative market sentiment will cause the breakout to be not valid because in the first day, a lot of people they're going to buy it. Okay, very very exciting news. A lot of people chasing in. But second day, all of the people scared already. Okay, all of the people they don't want to hold the stock anymore. They want cash. Because they are very scared of those market news. They are very scared of those worldwide uncertainty. That's why they cut loss or they break even or they even got a little bit of profit. They just take it. Okay, they want to exit the stock. Okay, they just want to hold cash. Okay, that's why the second day the selling pressure is a lot. The selling pressure is more than the buying power. That's why causing the breakout to be a fake one. Okay, this one is unexpected. Okay, next our topic will be how to identify the exit zone in the breakout trade. Okay, somebody Like someone, let's say if you trade a breakout, so you might be able to buy it. Okay, you might know how to buy it. Okay, but you might not know how to sell it, how to take profit, right? Okay, so let's go to it. So basically, we will need to sell at the resistance. We will need to sell at the resistance. This one, we call it in English, we can call it like it's an active approach, active approach. Okay, it means that you set the profit zone already. Okay, you have already calculated this one is the profit that you are satisfied with. Then you key in the sell order. You key in the sell order once you have already bought the share. Okay, so a resistance level is the point that the upward movement is blocked. Basically, we call it rejected. Okay, whenever a price shoot up to that zone, it's being rejected. Based on history, based on history. That's why chart movement, chart data is very important to us. Based on history, the price is rejected at that zone. So currently, if the price going up back to the zone is a potential sell point, is a potential resistance zone again. Okay, that's why if somebody they don't want to hold for long term, they can just sell at the resistance. Okay, this one we call it active approach. There is another passive approach, but we wouldn't be able to cover here. We only cover the active approach. Okay, active approach basically is that you already decided where to sell it. You already know where to sell it based on the historical chart. Okay, so that's why whenever the price approaches this level, the resistance level, usually the traders will choose to sell to lock the profit. Okay, they have already calculated the risk and the resistance, the risk and the reward. Okay, so in this case, let's see. This one is the one of the example. Okay, you can see there's two lines. Okay, the first line is the breakout. It's the line where the breakout happened. Okay, if the breakout happened, you buy during the breakout zone, right? You can see down there is the volume chart. Okay, the volume is increasing. That's why this potential solid breakout. There's not 100% as I mentioned, but we can, based on the price action, based on all the information that we get, we can see it as higher chance that this breakout is a real one. Higher chance that this breakout will give us a higher winning rate. This is how we see it. Okay, this is how we handle the risk. Then we base on the previous resistance zone. Okay, like we see that or previously the stop price hit some of the zone, then it start to drop. That's why we can expect that, okay, this time the price might hit the same zone again and get rejected. That's why once you buy the share, you can have already set the resistance zone as your take profit zone. You have already calculated the risk, you have already calculated the rewards. Then you queue your order. Okay, you key in the sell order. Okay, good till date. Okay, some of the traders, some of the retailers, we call it, they might key in their order using the day order. But usually we wouldn't suggest that, because if you have already calculated everything, you just queue your order GTD. Okay, good till date means that every day it will help you to queue again. You no need to every day have to manually key in again. Okay, so we will usually key in the good till date order. Then whenever the price hit the previous resistance zone, then it will automatically get matched. Okay, because a lot of us are basically is not a full-time trader. Okay, we might have family to take care of, we might have a job to do, that's why we wouldn't suggest that you go and monitor the stock market every single second. It's really difficult. That's why might as well that once you have already calculated your reward, you just key in the sell order at the resistance zone. If you are satisfied with it, then you key in the good till date order, then it will get matched whenever the price hit it. Okay, so usually we will sell at the resistance zone. So this is one of the example also. So this one is we call it the resistance trend line. Okay, resistance trend line. You can see that every time the price hit the resistance, it will get rejected. That's why if some of the short-term trader, okay, they might want to sell at that resistance zone unless you are a fundamental holder. Okay, that one will be a different case. Okay, so let's go into the case study. Okay, the case study, you can see basically today we will cover all those stocks that have the Macquarie warrant. So the warrant that we listed here is basically the warrant that shared by Afiq. Okay, so all these warrant you all can consider if you would like to trade the underlying. Okay, like just now Afiq mentioned, the warrant basically it can give you a bigger gain or a bigger loss. Okay, that's why provided that you have already analyzed the underlying well, you think that the underlying has a potential to go out, then only you leverage on the warrant. Okay, so in this case, this is a 99 speed mark. Okay, that's what we mentioned earlier. Even though for those big cap counter, right, you can also apply the technical analysis. Okay, so some of the people, if they have really big capital, they are okay to buy the big cap counter and hold. Okay, but maybe they put in few 100,000, then even the stock price move by 10%, then they can have a really good profit. But if we want to lower our exposure, lower our capital use, then you can consider the warrant as long as the underlying has already show potential of breaking out. Okay, like in this case, the red arrow zone is the point that the stock break above the downtrend line. Okay, every time we can see that the price is rejected at the downtrend line, means that it cannot go through. So until one day, let's think about it. The price successfully break above the downtrend line zone. It means that potentially, it could give us an upside. Okay, so after that we can see every time it goes up, then it will form a new base and continue to go up. So this one is we call it the uptrend. Okay, it's supported with every yellow zone. So whenever the yellow zone is supported, then it will go and challenge another zone. So once it's challenged and it will retrace again, then it will form a new zone. Okay, so this one is a 99 speed mark. Basically, you can see now it's a uptrend. Then also it might due to some of the facts, some of the news that might add value to its fundamental, such as the SARA. Okay, because a lot of people they're going to spend. That's why all this is the little news that add value to the chart movement. But we will usually see, or we will actually predict or analyze based on the chart itself instead of the news. Okay, secondly, this one is the eco shock. Okay, this one is the eco shock. So for this eco shock, we can also see a very clear, very easy to understand the resistance and the support. Okay, the first yellow zone is the support zone. Why currently is a support zone? Because it has already successful breaking out above the zone. Okay, you can see after it's breaking out above the zone, then it's supported above the zone. Okay, now it's consolidating at the other zone. Okay, so this one, the resistance and the support is very obviously can be seen. And what we can see from here is what I shared earlier. You can see the opening price and the closing price. So usually the opening price and the closing price will be the most touch point. Most touch point means that this is the price that is more critical compared to the high point and the low point. Okay. And this one is FFB. Okay, FFB. Basically, you can see once the breakout once the breakout already successfully happened, usually it will follow with huge volume. Okay, you can see my black color arrow down there. That one is pointed at the volume zone. Okay, actually we can notice that the first volume, the place that the black arrow is pointed, the first arrow, the first huge volume actually happened not during the breakout. It's actually happened during the bottom support zone. Okay, so this is what we mentioned earlier, if you remember. Okay, like whenever a spot price is going down, okay, it's going down, it's falling, then until one day, we want to see whether the bottom is supported, we prefer to see the huge volume, right? That's what I mentioned just now, right? So we can see actually the first huge volume, the place that the black arrow is pointed, actually it happened, but the stop price didn't move much because it's still at the bottom. It didn't move much, but it's one of the sign lah. It's one of the sign that we can monitor the stock, because suddenly when the price is traded at the bottom zone, suddenly a huge volume come out. This is the point that we can monitor it. Okay, but even though you miss it, no worries. You can see after that, when the price is successfully breaking out, it will also follow with the huge volume one. But if you're able to notice it during the bottom catching that time, bottom catching with we call it the huge volume that time, you're able to notice it, then it could be better zone. Okay, so we can see after it breaks out of the resistance, the net line breakout. Okay, the net line, it breaks above the resistance zone, then it should support above it. Okay, it should be supported above it. Means that this breakout is a solid breakout. Okay, and this one is Sunway. Okay, so Sunway, we can see there's two zones that I made in the chart. The first zone basically is the support zone before the breakout happened. Okay, the second zone, the zone that above 5 ringgit. Okay, the zone is the previous resistance zone, and currently it successfully break above it. So in this case, what we should do, we should monitor it whether this zone can be supported. If it can be supported, means that the price continue to be traded above the zone, means that this one could be a new support zone already, because the resistance zone is being broken out. Resistance becomes support. We call it RBS. Resistance becomes support. Okay. And also this one is YTL power. Okay, actually YTL power for now is it has been rejected by the resistance zone already lah. The one of the box that I made in the chart. Okay, so if let's say if traded this stock, if it goes back to the previous resistance zone, okay, so a short-term trader can choose to sell. Okay, this is what we mentioned earlier. Okay, because whenever you trade, you have to see where is your take profit zone. Okay, if this price, this stock is going to rebound, let's say, and you want to trade it, then whenever it rebounded to the previous resistance zone that it was rejected, then it's a potential selling zone. It's a potential selling zone. Okay, so this is one of the example. Okay, all the warrant that we listed here is the warrant that can be considered if you would like to trade it. Okay, that like we mentioned, this being suggested by Macquarie. So all these, if let's say you think that the underlying is doing well, the underlying has got potential, then you can consider it. Like for in this case, the Inari actually, in the overall bigger picture, actually is consolidating. You can see the line, the downtrend line is going down, the uptrend line is going up. This is a potential like a triangle zone, like a triangle consolidation zone, right? So you can see basically the price is now still consolidating. Okay, it didn't really give us a very clear direction yet, because all the while it's moving within the zone, unless you want to buy at the bottom of the uptrend line, and you want to sell at the ceiling of the resistance line, the downtrend line. Okay, unless you want to play around for this room. Okay, but the room is really little lah, because you can see it's consolidating already. Okay, so for this kind of chart movement, usually we wouldn't able to trade it, because for us, we feel that the direction is unclear. Okay, it's not clear yet. Like we shared earlier, the reason why we prefer to do the breakout is because it saves time. It gives us a very clear direction. Okay, the stock has already chosen the direction for us to see. So in this case, we can see that this one is a consolidation. Okay, consolidation. Then for this one, okay, NSG, this one, okay, from what we can see from the chart, it's very volatile. It's very volatile. Okay, because this stock, right, it involves some institution. Okay, we can see that one day the stock price already crashed a lot. Okay, due to this what we mentioned, due to a sudden news in the market affecting the market sentiment, because it announced that the company is going to acquire another listed company, but the listed company, those market players think that the one that being acquired is not doing well. That's why this company that announced to acquire the loss-making company, you know, it has a very bad impact. Okay, but we can see that it's being supported at the uptrend line. Okay, it's being supported at the uptrend line. The uptrend line is one of the support zone, which means that whenever the price drop to the zone, potentially, again, potentially, not 100%, potentially it will be supported, because you can see it's tested 3 times already. It's tested 3 times. So let's say until one day, if the stock really drop to the previous uptrend line support again, so potentially this one could be a safer buy zone for us, because it has been already tested 3 times. Okay, so currently 45 cents is one of the support we can refer. So this one is another case study, Gamuda. So Gamuda, we can see that previously is being rejected with a downtrend line. So until one day the price start to go above the downtrend line, it means that the stock has already chosen the direction for us. Before it show any technical signal that the price is going to be uptrend or the price is breaking out, usually we wouldn't be able to trade it. Even though you traded it earlier, it means that the one is just a rebound. It's not a reversal, it's just a rebound. You can see previously, even though the stock price dropped, whenever it rebounded, it will continue to drop further again. So that one is rebound. It's not reversal. Until one day it breaks above the resistance zone. It breaks above the downtrend line resistance. So it means that potentially it's a reversal. Okay, so you can see after in the May period, once it break above the previous resistance zone, then the stock price start to going up. Okay, start to maintain above. It is now in the uptrend zone. So we can see that currently 5 ringgit 40 cents around the zone is the new support zone. Okay, because that one is being hit by a low price. So the low can be a near support that we can refer, because there's no other price that we can refer to. Okay, so even though for this kind of big cap counter, we can still apply the technical analysis. This one is Nasdaq 100. Okay, so in this case, we can see that the yellow zone basically previously it got rejected. So until one day it shoot up, it breaks above the neckline zone. So the price should maintain above the neckline zone. So in this case, it really maintained and continue to go out. Okay, so currently you can see the red line. There are 2 red lines. So one is the resistance zone that previously tested. Okay, previously tested, because previous high, we call it previous high. Okay, previous high. Then there's one that being supported. Okay, so these 2 prices we can refer. This is a near zone resistance and near zone support. Okay, the other one is SP 500. Okay, this one also we can see that after it breaks out of the yellow zone, the one is a neckline breakout. Then the stop price continue to maintain above it, okay? And also we can see that there's a quite clear uptrend support line, the black line, okay? This line means that the stop price is being supported in that zone. So if let's say the stop price start to break below the zone, so it means that currently, not to say 100% it will go for a reversal, but at least it means that in short term, it's like not as strong as earlier. It might go into a short-term consolidation until a second breakout. Okay, so this is how we see a chart pattern, a chart movement. Okay, so it's end of my presentation. So let's go into a Q&A section. If you have some question, feel free to key into the Q&A session.
Yep, there are already many questions here on the Q&A box. Okay. So if you have any question to ask our speaker, please write them at the Q&A box, yeah? So when a breakout happen, what kind of volume is needed? So there's a question by Lik Xuan.
What is the breakout? Okay, okay. Usually, what kind of the volume needed? Okay, usually we will see that we cannot really quantify the needed volume, but we can see based on we call it comparison. Okay, means that previously during the zone that the breakout not happened yet, during the consolidation zone, we call it, usually the stop price or the stop volume is just moving normal. Okay, until one day when the stop price is being broken out, the breakout happens that time, right? The volume, usually we call it significantly higher. You no need to really measure it like, need to be 1 million or 2 million unit higher. No need to really quantify it one. You can see that the volume bar is significantly higher. Significantly higher. It's very, very easy to see one. It's definitely much, much higher, probably like 2 times higher or 3 times higher. Sometimes, depends on the stock type. Some of the stock not that liquid. So the during not liquid that time, the traded volume is little. So until one day somebody push out higher that time, it can be 5 times or 6 times higher. So we cannot really like quantify it. But you can see that whenever the real breakout is happen, obviously the volume bar is significantly higher. Okay.
All right. So the next question by Alvin. May I know if the price increase and the volume increase as well? Does it indicate good to buy or real breakout?
Okay, yes, but it has to depends on the zone that the volume form. Okay, let's say like we mentioned just now earlier, if the stock price is just a fresh breakout, like previously is moving in the consolidation zone. So until one day it breaks out, this is the first day that the price move out, and also with the increased volume. Then there's the point that we will prefer. But if let's say the stock price already going very high, already churned up, okay, already spiked for many, many times, okay, then it spike again with a very super, super high volume, that even that time we wouldn't be able to buy it. We wouldn't buy it because the risk is too high already. Because it has been going up for so long, then until one day a huge breakout again. So we prefer to spot a stock which is fresh breakout with huge volume, then okay, no problem. Okay.
All right. So the next question is, what does red color bar in volume mean?
Okay, so the red color bar in the volume, it means that during the day, the stock price drop. So it means that basically the day is a retracement day. It's a retracement day. So we have to see whenever during an uptrend or after the breakout happen, if the retracement happen, the volume should be red color, but we have to monitor the volume cannot be too huge. Because as we mentioned just now, during the retracement, if the volume is not huge, it just means that the normal retailer is selling. It's not the big boy dumping. Okay, if the retracement comes with huge volume, this is not the point that we will prefer. It means that something is happened, something that is not usual, something that is not classic. Like we just mentioned, the classic price action, it should go out, price out, volume out, then price down, volume down. It's a very classic formation. So if something unusual happen, price down, volume out, then we will feel not comfortable. Not to say we will totally skip it, but it will give us a signal that this thing is not what we studied earlier. This is not the classic pattern. Okay.
All right. So in the 99 speed mark case, so the next question here is why the volume is nothing much change when it is leading to an uptrend.
Okay, that's one of the, actually we got 2 points. First point is that if you really look into the volume bar, actually is still higher than the previous we call it consolidation zone. Okay, it will definitely be higher if you compare. Just how like we mentioned, we cannot quantify it, but if you compare to the previous volume, it will be slightly higher, or you can see it's obviously higher. Okay, that's one thing. It is still higher. Okay. Second thing is that because this one is a highly controlled counter, okay? 99 Supreme Mart actually is a highly controlled counter by institution and also by their founder. So we call it the unit, okay? The unit or the position left for those, we call it free float, okay? It's not that huge, to be honest, okay? The institution and the founder, I think, if I'm mistaken, already hold close to 90% of it. 85 or 87, I can't remember already. But this one is very highly, we call it highly controlled counter. That's why the volume, it might not be too huge compared to those small cap, mid cap, because basically no much volume in the market already, all being hold. Okay.
All right. So the next question is, do direct business transaction volume indicate a coming breakout? So for instance, in the Southern Score Builders example, there are about 19 million DBT at about 51 cent a few weeks ago.
Okay. A few things that we need to see. First thing is that if you see a huge volume DBT happen, we have to see whether this one is a fresh DBT or this one is just a usual practice of the counter. So that's why I mentioned about the Southern Score. So basically this counter, right, all the while on and off, it will have DBT. That's one thing. So if a counter suddenly it has a very huge DBT transaction, which if you trace back the historical data, it doesn't have any previous DBT record. So this kind of DBT, it gives us a more important signal because it's a fresh DBT, fresh changing of hand of the stocks unit. Okay, but for this kind of actively DBT counter, right? Although it can also signal something, but the information might not be that important anymore. That's one thing. Okay. The second thing is that even though the huge transaction happened, we have to still refer back to the chart. We have to still refer back to the chart. Like for example, for now, I'm seeing the chart. So we can see that the 50 cent is the support. So for me, if I want to trade the counter, okay, I will use 50 cent and 52 cent as the support zone to trade it. So basically, all this information, as we mentioned just now, all those information, all those like market sentiment thingy that we cannot really predict, all this is just extra info for me. We will still need to base on the chart to plan our trade. Okay.
All right. Thanks, YC. So the next question by Key is how to identify hot money is quietly accumulating a certain stock, pushing out the price, and then leave the stock.
Okay. So if you are referring to the hot money, right? Usually, all this hot money, usually, okay, is we call it super high net worth, or those people has got few millions, or a group of people has got a few millions, So usually what they will see, they might not see those counter with highly controlled by the institution. Means that those hot counter, like let's say as just how we mentioned, the SCG Berhad, all those institutional, they like the counter, or MA Holding, those kind of institutional baby, okay? They wouldn't go to this stock one. They will usually go to those small cap, or they will go to those like very low volume counter. Okay, they will slowly accumulate it maybe for some months, or maybe if they want to act quick, they will create a volume, not too huge. They will create a volume to buy out, to collect a block of share first. Okay, then after that, because the buyer collected and no more buyer because it's a low liquidity counter. That's why the stock price will continue to fall down again. Then they will slowly collect again. Then one day they will push higher. So all these counter, right? Usually you will notice even though one day it shoot up a lot, you wouldn't be able to really collect it one. This first thing, because it's very difficult for you to monitor it, for you to spot it. This one thing. The second thing is that usually this kind of stock, the liquidity is not good one. The buyer and the seller basically is the same gang of people one. They just want to lure the retailer in. So it's really difficult. We wouldn't suggest you to really trade it unless if you spot it at time, you can see the previous volume is the healthy volume. Previously, still got a buy sell happening, just that this time it break out a lot. This time you still can buy it, you still can consider it. But a lot of times, if you see those counter, totally no volume in the earlier one, then suddenly it show up. All this basically is 1 day or 2 day show. So we wouldn't suggest you to really focus on it. Might as well we focus on those counter that has already proven got sufficient liquidity. Then you just find the support and the resistance zone to plan your trade. If there's a breakout happen, then you just trade accordingly. No need to follow those manipulated counter, especially in Bursa for now. Because the liquidity is getting lower and lower already, because the retailer participant is very little, below 20%. And the foreign fund also selling. That's why only the local institution is supporting, and retailer, those we call it like sophisticated investor, they also focus on those counter controlled by institution, like SCG Berhad, MA Holding, those kind of got a data center team counters instead of those small cap, those previously no volume one. Even though 1 day you can earn a lot, but the chances is very little, very difficult to spot it. Okay.
All right, so that's all the time we have with YC today. So thank you everybody for tuning into this session to learn about how to do momentum trading in the US and the Bursa market. Hope that you have gained some insights into how do you perform momentum trading, how to identify real breakouts, and how do you use structured warrants to complement your trading strategies. So with that, thank you everybody and hope to see you in our next webinar. Bye bye everybody.